Hi traders, Fawad Razakzada here, market analyst for City Index. Today is the 28th of April. So the markets are looking a little bit more calm at the start of what could be a very busy week for economic data, as well as earnings, with this being the most important week for technology company earnings. So following last week's recovery, the S&P 500 has broken its bearish trend line, but it is still inside a key battleground, which I've shaded in orange in my chart, between 5,500 to 5,556, which was basically the prior support area that gave way during the height of the selling earlier this month. However, if we go back below this broken trend line, I think that would scare away a few bullish traders, potentially paving the way for fresh selling towards the support levels shown on the chart. And among them, the shaded region here at around 5,295-ish to 5,300 or so could be the next potential support area to watch, where we have seen quite wide swings in either direction in the past. So that area is the key battleground on the downside. Let's see if we'll get there later this week. We potentially need to see some further escalation in the trade war, you'd imagine, for the market now to go back all the way to that area. But let's cross that bridge if and when we get there. For now, it is mildly positive as things stand. Now, I mentioned it's going to be a very important week for macroeconomic data, and we have the jobs report from the US on Friday to look forward to, as well as all the other economic indicators like the PMIs and so on. And ahead of that, we have a dollar coming back under pressure against the Japanese yen. By the way, the Bank of Japan is meeting as well this week. I don't think they will raise interest rates at this particular meeting. Anyway, the trend is clearly bearish on this currency pair. And are we now seeing the possible resumption of that downtrend is the key question here, as rates test 144. And 144 to 144.50 is a key area of resistance, as this area was previously support. And now you can see that this area has turned into a bit of resistance. So is the selling resuming here? Well, that's the key question. I think if we do go down from here, 142 is the obvious support level to watch next, given the importance of it historically. 140 is then in focus below that, which is a massive level. It's a psychologically important level, and where we've seen multiple bounces in the past. So a break of that level, a potential break of that level, could be big for the dollar CAD or the dollar yen even. If we go below 140 in the days and weeks ahead, I think we could well be talking about mid to low 30s thereafter. But let's take it a step at a time, because there is a possibility we could see risk sentiment improve further, and that could weigh on the appeal of haven currencies like the Japanese yen. Although the dollar could also weaken if we have significantly weaker data this week from the US. So let's see where we go from here. On the upside, I mentioned this area of resistance. If we break that, then 146.50 comes next, and then thereafter 148 is the next upside level. Now, looking at gold prices, and we saw a big drop from that psychologically important 3,500 level, as prices were severely overbought on the RSI and other momentum indicators. However, it is now bouncing at the time of recording from this area of support I have mentioned in my report from earlier today, between 3,245 to 3,283, which was previously support and resistance. Should the selling pressure resume, however, because of improvement in risk appetite, for example, then the next downside target could well be the 3,167 level, which was the high from earlier this month, which gave way, leading to fresh record highs. Below that, we have this bullish trend line, and then finally that 3,000 level. But obviously, with the trend being bullish, it makes more sense to focus on the upside than the downside until the trend changes. So with that in mind, where do we go from here? Well, if the buying pressure resumes, the next key levels to watch on the upside include these ones I've highlighted on this chart at 3,366, which was tested, by the way, on Friday and held. Above that, we have 3,430, this level right here, which is the next potential resistance ahead of that 3,500 level. And beyond that, obviously, with gold trading at record highs, there are no obvious resistance levels to keep an eye on, except those round handles like 3,500, 3,600, etc., etc. So the trend is bullish. Let's see how long will this continue. But we have seen the RSI come back a little bit from severely overbought levels, at least on the daily and lower time frames. But on the weekly and the monthly time frames, you can see that the RSI is still at significantly overbought levels, which will need to be addressed at some point down the line. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.